Welcome to my channel. I'm the Cover Call guy, and this is my journey to creating a $120,000 per year passive income portfolio. It currently yields about $70,000 a year, just about $6,000 a month, and I will be strictly using Cover Call ETFs to reach my goal. Once I reach my goal, I'm not sure what to do. I'm not selling my Cover Call ETFs. I'm open to new ideas. So leave a comment on where I should start investing next. Perhaps maybe a little bit of growth, a little bit or single stock, or something else. I don't know. Let me know. I'm open to new ideas and always willing to research and learn new things. Right, legal disclaimer. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Always do your own research and consult a licensed professional before making financial decisions. I am just some random idiot you found online, and I could be completely wrong. So with that out the way, let's get started on today's video. I really like this topic. As I was reading the news, and I just started, questioning of where exactly the money's coming from, right? The cover call ETFs and income investing has really exploded. So it just gave me a little idea in my head, and I started diving and researching, and that's where I came up with. So hope you guys enjoy it. Right, so today's video is about the great Re-Prioritization, right? The 2025 shift to income investing. All right, the market's number one customer has changed, right? 61.2 million Americans age 65 plus, which is almost 20% of the US population, right? Their goal has changed. For 30 years, their goal was how fast can I grow? Now their goal is how much cash can I get now, right? They must switch from growing their nest egg to living off of it. With a median income of just about $30,000, investment income is a necessity, not a luxury. I don't even know what you can do with $30,000, right? If that's, we gotta assume the worst, and if that's their only income, what the heck are you doing with $30,000? I don't even know if you can even live a decent or nice life in a third world country with $30,000, as everything in the world has gone up. So it's not just the United States facing inflation. Everywhere, every country is facing inflation. So you might live a decent life, somewhere maybe South America or Southeast Asia. But then again, like if you have health problems, what is $30,000 gonna do for you, right? It's something to think about, right? So going off of current news, um, a recent Wall Street Journal analyst called this the income imperative, noting that new retiree portfolios are prioritizing yield above all else. So if they're doing it, we got to follow the money, because young investors like myself should start looking into really building up income investing. The smart money is pivoting, right? We should follow the money. That's the easiest way to make money, is to follow the money. What is Wall Street doing, right? Pensions are cashing out after the big 2024 gains. Pension funds are selling their volatile growth stocks to lock in those gains. They are buying real cash flow, right? They're rotating out of speculative stocks and into tangible assets that produce stable, predictable income. Right? They are trading hope for income. This institutional pivot is proof that shift has already begun. They are prioritizing safety and yield. Right, this is current news of quarter 3 of 2025. CalPERS, the largest U.S. public pension fund, just announced a new 5-year plan to increase its allocation to real assets and infrastructure by $20 billion. Right, citing a need for stable, inflation-protected cash flows. So follow the smart money. Follow what Wall Street is doing. Right, corporations are now cash flow machines. Right, this diagram is just showing a fundamental shift that the U.S. corporations are using record profits to pay you, the shareholder, and reliable growing cash dividends. Right, so chase the income, chase what is actually going to pay you. Don't just go for the hope and dreams now. Right, that is the old way. The income universe is expanding, right? The so-called 10x thesis, right? The 10x thesis is simple. The entire universe of investable, high quality income producing assets is growing. What was once just labeled as utilities is now a massive, diverse market, right? So, midstream energy, once volatile, now a stable income staple with zero dividend cuts in 4+ years. Then we have data, the ever growing data centers, right? The REITs, the pick and shovels of AI paying massive dividends. Then we have mature big tech companies like Microsoft and Meta are now dividend paying cash cows. Then we have the new and upcoming stable foundations and many more stable, profitable companies, right? But here's the key. This massive stable universe of companies is now the perfect raw material for covered call ETFs. They own these stocks and sell option on them to generate high cash yield for you. So again, start focusing on the income, right? The growth is already there, right? There's probably a little bit more growth to grow, but like it's already been stabilized. So in a way, it's more of just now capitalizing on buy, hold, get paid. Right, the old growth model is broken and of free money, as you can see, right? The takeaway here is why gamble on a 0% yield growth stock when a risk-free T-bills pay you 4%, right? This forces capital to find a better yield, making high income 8% or better with covered call ETFs, which looks a lot more attractive. Right, the old growth model is broken, right? Profit or king, right? Show me your cash flow, not your net worth. Right, the old game is to gamble on moonshots. For the last decade, cheap money has rewarded growth at all costs. Companies that were burning cash, right? Profits didn't matter, only hype. And basically, these are the new rules now, right? Profits pay you, right? The market now rewards profitable, stable companies. This is the perfect environment for covered call ETFs, which own these stable companies like Microsoft, Apple, and they generate high yield cash flow from them. All right, going off the old broken growth model, volatility is fuel, right? The growth market is trapped. The Mag 7 and AI boom is facing regulatory attacks. This creates massive uncertainty and stock market volatility. And some of the current news in October 2025 was that the DOJ's landmark case against Google is still in its penalty phase, and a new FTC probe into AI-driven ad pricing was just announced. But why is this good for cover call ETFs, right? Volatility is terrible for buy and hold growth investors, but cover call ETF, right? It is our field. That's how we make the money, right? Higher volatility directly increases the value of the options. These funds sell, allowing them to generate higher cash premiums for me and you if you're the shareholder, if you buy them every single month. And then we look at the 2025 capital rotation, right? Speculative growth stocks have lost damn near 100 billion, right? Scared money, which is bonds, has increased by 350 billion, and then smart money, covered call ETFs, has increased by 80 billion and growing, right? So when the Fed, in the current news here, with November and December, right, when the Fed is signaling cuts for 2026, our analyst already has predicted 350 billion in scared money, which is bonds, will be trapped in low yields. Right, a significant rotation is expected from bonds into higher yielding solutions like covered call ETFs. So follow the money. A lot of money is being rotated out of these and into higher yielding paying ETFs. Right, explosion growth of cover call ETFs, right? Look at that, 2022 was only 12 billion, then 2021, 25, it literally is doubling every single year, right? The total market has exploded to over 150 billion. To put that in perspective, that's an 80 billion dollar increase in new money this year alone, 2025, right? Is more than the entire market was worth in 2022, guys. It is income investing is the new wave. It's going to be the new foundation, right? 4% rules is completely it's outdated. It's obsolete. Growth. That's if you can even have a job for the next 30 years, right? Look at AI. AI is taking over the jobs. It's replacing a lot of smart people. So you can see it's not just entry-level jobs, but people who hold bachelor's, masters, 2 bachelors, right? And all these certificates, fired, gone, laid off, right? So you guys gotta think about, yes, growth is going to be, um, it used to be a stable because it used to be a staple of a portfolio, right? However, that's when there was still company loyalty. If you stay with a company for 20, 30 years as expected and not get laid off, very low chance you were going to get a pension plus your growth stocks, right? Your growth stock would have grown for 30 plus years and you would have retired with 1.5, 2 million, 2.5 million, whatever the case that may be. Now people can't even hold a job for more than a year before getting laid off, right? So think about it. Growth stock is absolute, it's outdated, right? A lot of these millennials and Gen Zs can't even hold a job, or you know what? Not even holding a job. They can't even find a job, or if they get a job, it's not gonna be livable wage, right? As much money as you can save, you want that money to pay you money. You want that money to increase and compound faster than growth. So it's a simple choice, right? The gamble versus the paycheck. The growth gamble, right? Return. Your expected return is 20.5% if you can stomach it, right? Over the course of how many years? But volatility at 23% is very high stress and high risk, but you get paid nothing, right? And the verdict is that the high stress gamble on hoping for a future price is a maybe, and that's if you can even build enough to it, right? And then the income solution, where the yield is 9 to 12%, we call that the paycheck, and then volatility is moderate, lower stress. Again, pick your covered call ETFs and pick wisely, choose wisely. It all depends on your covered call ETF, right? The income is reliable monthly check or even a weekly check if you decide to go weekly, right? There's pros and cons to that too. The verdict, right? A lower stress strategy pays you in cash every month or week, and you replace your 9 to 5. You invest aggressively, you do it consistently, you will replace your 9 to 5. And if you start at 18, you probably retire by 30 or 35. Or you can push yourself if you can to 40, right? And you'll be making double or triple your salary. And who wouldn't want that? Right? Your new portfolio mandate, right? This is a mandate for anyone who actually wants to survive in this ever uh, high inflation environment. The job market, the labor market is absolutely garbage right now, right? Your old 60/40 portfolio is broken. It doesn't work in this environment no more. It no longer protects you. Income generating fund or the new safer core for your portfolio, right? It's a better inflation shield. While inflation eat bonds, fixed payout covered call ETFs are designed to thrive in volatile market, protecting your spending power, right? 100K has become the new 40K. Yeah, you guys heard that? Because of inflation, right? Well, 100K used to be the gold standard. Now it's barely middle class, right? Income is not for everyone. You no longer need to be an expert. Products like cover call ETFs make it simple for anyone to get a high income stream. Again, guys, please do your own due diligence. Not all cover call ETFs are the same. All right, let's summarize the 2025 inflection point, right? This is a permanent structural shift. What you're seeing in 2025 is a definitive inflection point, not a temporary cynical change. The old growth stock paradigm is obsolete. Guys, the one big beautiful bill, right? That bill already is gonna increase the debts by what, 5 to 7 trillion, and that's what they're expected. So at least a little bit more, right? They give you the Congress is giving us the low end of it. They're printing more money just from that one bill. You don't think they're gonna keep doing it, right? It's going to, the printer isn't stopping, right? So don't wait for the power of compounding, right? This is not just retirees. Reinvesting in 8% yield doubles your money in just over 9 years. Now imagine if you find a nice cover call ETFs that pays you anywhere from 8 to 12%. Now you double your money in probably 5 to 7 years compared to a 20, 30-year growth stock. Come on, guys, this is easy, right? Starting young builds a massive cash flow stream for true financial freedom. right? The solution is clear. Income generating strategies, especially covered call ETFs or expanding, right? Is indispensable core staple of your portfolio. The proof is in the data. The 2025 hard data confirms this rotation, right? It's a stampede of capital into income. It's rotating. Smart money is figuring this out, and you gotta follow smart money if you want to make money. Right, the future is income. Right, the secular forces of demographic, monetary policies, and corporate maturation are fully aligned. A portfolio built to last, uh, a portfolio built for the last 20 years is destined to fail you in the next 20. Don't use outdated, obsolete models, right? It doesn't work. You can look at the people that are using that model now that are retired, that are struggling, right? They can't even feed themselves properly. They're not living life. They're just out there surviving. And there's nothing much they can do. They're already 65 or 70. They would have to have moved out of the United States and find a very low cost country. And that's not enjoyable. You wasted your prime years. And I hope you guys are seeing that in real time, reading the news, catching up on current events. This is happening right in front of us right now. If you are lucky to have a job right now and lucky enough to have overtime, you guys have to really think about it. Do your own due diligence and your own research. I'm not just saying this, right? Not financial advice. I'm just having a conversation here with you guys, and I hope you guys are catching up on the news, reading the news, and educating yourself, because if you guys are not creating a second income and you lose your primary income and your second income isn't enough, what happens then? It's not that easy to get a job right now. I mean, the labor market is in shambles. Unless you are in a very, very desired narrow field, maybe like nursing or in the medical field. But right now, it's tough. It's tough. I see a lot of people, I see a lot of smart people applying, right? And they're not getting, they're not even getting interviews. So it's something to think about. Uh, Again, that's my rant. That's my video. I just subscribe, comment, like, please. Let me know what you guys think. Um, this this video was inspired just from me reading the news about the growth, the slowing of growth stock, and how Wall Street is pivoting, and where the money is going. And then what sparked my interest was how popular covered call ETFs became. So I was like, well, where's that money coming from? Why are billions of dollars, hundreds of billions of dollars flushing into covered call ETFs? And I came to my conclusion in these slides. So I hope you guys learned something new. If I'm missing anything, if I need to be fact checked, let me know. I always love to go ahead and get the right information. And thanks guys for watching. I appreciate it. Thank you for following me on my journey. Stay tuned.